Welcome back to Candlestick Signals for today's market, July 24th, 2025. We're diving deep into the candlestick signals that are shaping today's trading landscape. Buckle up because we've got some exciting movements to discuss, including new all-time highs and sector rotations that might just surprise you. Let's kick things off with a market snapshot that's sure to grab your attention. The S&P 500 and Nasdaq have both closed at new all-time highs, with the S&P 500 finishing at an impressive 6,358.91, up 0.8% for the day. It hit an intraday record of 6,360.64 at 2:45 p.m. Eastern Time. Showcasing the strength of this bull run, the Nasdaq wasn't far behind, rising to 21,020.02, a 0.6% gain, propelled by the unstoppable momentum in AI and technology stocks. But here's where it gets interesting. The Dow Jones Industrial Average, while edging up 1.1% to 45,010.29 and closing above the 45,000 threshold for the first time, is still shy of its all-time high by 64 points. This divergence hints at a rotation out of cyclicals, even as technology continues to lead the charge. Now let's talk about fear, or rather, the lack of it. The Volatility Index, or VIX, declined 6.9% to 15.37, reflecting a high level of confidence in the market and reduced anxiety among investors. This is a clear signal that bulls are in control, at least for now. Shifting our gaze globally, we see that Indian benchmarks Nifty and Bank Nifty are riding the bullish wave, closing near their highs and forming strong bullish candlesticks. In the crypto world, Bitcoin is hovering above $118,000, testing key support at $117,000, with consolidation likely in the near term. Let's dive deeper into the candlestick structures, starting with the S&P 500. Today, it formed a bullish continuation candle, closing near its intraday high. What's particularly noteworthy is the little-to-no upper wick and long lower shadow, suggesting consistent buying throughout the session and strong conviction from the bulls. This pattern is telling us that buyers are in control and are pushing prices higher with confidence. The Nifty and Bank Nifty in India are painting a similar picture, with bullish candles featuring small upper shadows and extended lower shadows. This reflects strong buying pressure after initial profit-taking, indicating that bulls quickly stepped in to support prices on any dips. Now, let's spotlight some notable individual stocks. Alphabet, the parent company of Google, formed a bullish engulfing pattern with a strong gap up and close at the highs following impressive earnings. On the flip side, Tesla experienced a bearish reversal, the large upper wick indicating heavy profit-taking after an earnings miss. Interpreting these technical signals, we can see that the S&P 500's extended run is powered by strong earnings, constructive trade developments, and sector rotation. The trend remains upward, though we're approaching overbought territory. Momentum indicators like the RSI and MACD are at elevated levels but haven't yet triggered reversal patterns. The Nasdaq's advance past 21,000 signals optimism in growth and tech stocks, especially AI chipmakers like Nvidia and AMD. Meanwhile, the Indian Nifty's range breakout above resistance confirms bullish intent, though traders should be cautious of a potential failed breakout that could trigger a reversal. Let's break down the key support and resistance levels for major indices. For the S&P 500, we're looking at minor support at 6,350, with stronger support at the 50-day moving average of 6,109. Resistance levels to watch are the psychological 6,450 mark and the blue sky's territory of 6,500. The Nasdaq Composite has support at 20,900 and 20,700, with resistance at 21,150 and 21,300. The Dow Jones is finding support at 44,800 and 44,500, with resistance near its all-time high vicinity of 45,058. For the Nifty 50, we're watching the 25,183 to 25,255 no-trade zone, with support at 25,120 and 25,070, and resistance at 25,330, 25,430, and 25,480. The Bank Nifty has support at 57,000 and 56,700, with resistance at 57,300 and 57,500. Bitcoin traders should keep an eye on $117,000 and $115,226 for support, with resistance at $119,482 and $123,000. Turning to sector and stock highlights, technology led the gains today, with Alphabet and Nvidia outperforming on strong results. AMD and other AI-related stocks also surged, riding the wave of enthusiasm for artificial intelligence. The healthcare sector was the best performer, up 2%. Led by Thermo Fisher's impressive 9.1% gain following an earnings beat, industrials and energy sectors weren't far behind, gaining 1.6% to 1.8% as supply and demand data showed strong July energy demand. The XLE and XLI ETFs outperformed, reflecting this positive sentiment. However, it wasn't all green across the board. The utilities sector was the only major sector in the red, the XLU down 0.8%. Among notable movers, Alphabet's earnings beat propelled it up 2%, while Tesla saw profit-taking post-earnings, dropping 3%. Nvidia and AMD continued to ride the AI momentum, while IBM fell 5% after missing expectations. Thermo Fisher Scientific was the standout performer, surging 9.1% on its earnings beat. The sentiment in the market is overwhelmingly bullish, driven by strong earnings, positive trade and tariff news, and broad sectoral participation. With 10 of 11 S&P sectors closing higher, the low VX levels and record-high closes support a risk-on environment. But they also warn of potential short-term overextension. However, we must inject a note of caution. The overbought technicals could lead to near-term profit-taking, especially if upcoming earnings disappoint, or if we see weakness in macro data in the coming days. In the crypto space, near-term consolidation is expected for Bitcoin, with price action between $117,000 and $119,500 likely to determine the next directional move. To summarize, the S&P 500 and Nasdaq are in clear uptrends, both forming bullish continuation patterns and closing at all-time highs. The Dow Jones presents a mixed picture, lagging its peers slightly as cyclicals remain flat. The Nifty 50 in India has broken out above resistance, signaling further bullish intent across all major sectors. Bitcoin, meanwhile, is in a sideways consolidation, testing key support levels. As we conclude our analysis for July 24, 2025, it's clear that markets ended the day on a strong note. With record highs in major U.S. indices, the candlestick structures across equities point to further bullish momentum. Confirmed by broad sector participation, strong earnings from key players like Alphabet and Thermo Fisher, and constructive macro and tariff headlines. However, technical indicators are signaling stretched conditions, especially in the S&P 500 and Nasdaq. This suggests that a near-term pause or mild reversal is probable if we see disappointing earnings or weakening macro data. That said, no major bearish reversal patterns are present on the daily charts, which is encouraging for the bulls. Investors should keep a close eye on the support zones we've discussed and avoid chasing extended moves at the upper band of resistance. While the overall trend and sentiment remain risk-on, vigilance is warranted as volatility is likely to increase after this recent burst of momentum. Remember, in the world of trading, today's signals are tomorrow's opportunities. Stay informed, stay disciplined, and most importantly, stay tuned for our next market analysis. Until then, the information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.